Hi, everybody. Welcome to the second segment, episode 212 of Sold with Updike Pugh. I'm Jeff Updike.
I'm Weston Pugh, and today in the second segment, we're going to talk about real estate market trends year over year for January. And I know Jeff loves these topics when they're really long. He's like 5 topics on why your roof sucks. He wants it really short.
This is actually, it's interesting to me. I mean, numbers are always interesting to me. Seeing trends, they can be somewhat boring because all it is numbers, but I like the graph part of it because it does it's a good way to visually kind of see what's happening in the market.
And before we get too in the mire, this is not going to be so deep that you're going to be put to sleep. But one of the great things I want to point out is that we have the ability to pull this data for any area, zip codes. And so this can get really important if you're looking to make an investment or a move. So let us know and we can make that happen.
It's one of the things that I think we do a little differently than a lot of others because we do really focus in on this data.
Right.
Real estate is not necessarily just about the comps in your neighborhood, but it's what the direction of the market is.
Correct.
And pricing the home properly. We all know not the only thing, I don't want to say it that way. The most important factor in selling your home is pricing it properly.
That is correct. Because it is what drives the rest of the bus.
That's exactly right.
And we were on tour yesterday and ran into several agents as we were out and about, and it was the number one topic, like, what is the market doing? It is on everyone's mind because it is a little different, and what we saw in the past in 2022 was very different. So we thought we'd take a look and give you a better idea of where we're headed.
So slide number 1, we're talking about the sales price in Dallas County. Dallas County is going to be the red line there, and the blue line you see is the entire MLS. And you can see the median sales price began in January of this year. And in Dallas County, it was $315,000.
And then that actually, as you can see in the peak, if we can slide up there, the peak of the market, it hit 405. And this is when all of the clickbait titles started coming in as they talked about how everything had dropped off. But one of the important things that we want to point out is that by the end of the year, when all the dust had settled, we were still up 15,000 over the beginning of January last year versus January of this year. And that is a traditional 5% increase in the actual median sales price.
That is really what our market does on average, or has done on average for the last 30 plus years.
Had it not had a drop off, can you imagine what it would have been like today? That rate of appreciation, we didn't calculate that. That would have been
it would have
mind-bending.
It would have continued to go right up. The next slide is a month's supply of inventory, and this is really interesting because we're not dealing with enough inventory now to even be at a balanced market. It is still what most economists would consider a seller's market because you need somewhere between 3 and 4 months worth of inventory for that balance to happen. And then when you get up into the 7, 8, 9 months, that's where it begins to become a buyer's market because houses just aren't moving up there.
And it is important to show you here that both the entire MLS and Dallas has begun to kind of take a mirrored image of itself. We started 2022 in January with 0.8, and then we started this year with 1.6 months of inventory. So it's basically doubled. One of the things we are seeing is that houses that are still priced right, super clean, are averaging still a couple of days on the market. So it's not going to sit there forever as people are hoping. So best to be well versed on what that neighborhood has to offer.
And I think this next slide's really going to tell you the crux of why we're not seeing values fall. If you look back at 2007, 2008, when we were in the peak of that market, there was so much inventory available. And we're not dealing with that now. And that's really what's kept our market, I think, very healthy here. We started in January of 2022 in Dallas County with about 1,300 active listings. And then we really didn't increase much. We kind of ended the year with, 2,200, excuse me, that's right. We ended the year with about 2,200 in the Dallas area. If you look at the entire MLS, there is a big significant difference between what started the year and how we ended that year.
And I think, Dallas has become very diverse, and the entire MLS actually tracks a large distance. You can speak more to where that all is.
Abilene to Tyler, Wichita Falls, State Line, all the way down to Waco.
And
it's huge. It's one of the largest MLSs in the country.
And because of that, I think that Dallas's inventory is lower. We have tons of people that are moving just into this North Texas area, and therefore inventory doesn't actually get built up because we do have those people from Chicago, from California that are actually relocating here often.
And you made a really good observation earlier that Dallas County makes up about 22% of the sales that were reflected in the entire MLS. And so the Dallas County market is a huge driver.
It is.
Huge driver.
It is, and it is interesting. The fourth slide that we're going to take a look at is going to be actually new listings. And new listings, again, it was a very, for us, it was more of a flat line. We had small blips and we had small valleys. And I think that, prior to, 2008 and 9, this was a typical way that Dallas real estate moved. It just kind of, you would describe as it just kind of tumbled along, super seasonal. We knew it was happening. But you can see in some of the other markets in the entire MLS, it was a lot more volatile. And that volatility can actually increase in value, as you see here, and it can actually have huge drops as well.
And this is the one that I was referencing earlier where I said there really wasn't much of a change, because I think the beginning of the year there were, excellent, Zach, that there were 1,500 new listings in January, and then when we got to January of this year, there were even fewer. There were only 1,346 new listings.
It is interesting that we see that we have new listings are lower, but days on market or months on market is greater, even with less inventory. And that just goes to that point that we're seeing that retraction from buyers for the simple fact that interest rates have changed so dramatically.
And our last slide is going to talk about closed sales. And this was starting off the year, we had about 1,210 closed sales in January, but because of those inventory issues that we're still dealing with, we only had 741 in January of this year.
And that is, again, that is a big drop. It'll be interesting to see which way we head into 2023. With fingers crossed, we think that things will be really strong. Again, it looks like it will have a seller's market, even though sellers are aware that they have to make concessions for buyers given the new interest rates. And as we will look, as what we'd like to conclude is talking about the number of people that are actually making application for loans has increased, actually 25% week over week, which is very interesting.
And 57% of those that did apply locked rates where they were paying a half of a point, at least half of a point, and 44% paid at least a full point. And if you want to know what points are, reach out to me directly. I won't bore everybody here.
But that is important because we are seeing people becoming creative, but not in a way that it was in 2005, 6, and 7 when it was interest-only ARMs and you could fog a mirror. That type of creativity was doom and gloom at the end. This kind of creativity is actually smart business decisions.
It really is. So I hope you all found that helpful. If there's any information that you'd like that is a little more granular than this, we'd be happy to provide that for you. Just throw us a little note in the comments below and we will make that happen.
And just remember, we want to be your realtors for life.